It's been tempered and sedate all across the global screen yesterday. Not just we consolidated, but as did the globe as well. You can see on your screens the kind of cues that we were handed down. Just a very meager 60-odd point kind of move coming in for the Dow. Similar was the picture all across. S&P, of course, held out smartly, as did the Nasdaq. But even Asia is just very, very lackluster this morning. In fact, markets like Japan, Hong Kong are in fact seeing some bit of red also on their screens. And so did we. Consolidation, and a healthy one at that yesterday.
Sesha, look at yesterday's price action only in isolation. Thursday ko kya hua? Okay, it was not very impressive. I look at this week, this has been a record week. I look at the month of December, impressive. But the minute I look at market from October low, I think it's been a record-making comeback. Yeah. So you really have to understand that what kind of time frame you're looking at. You take a magnifying glass and okay, you say Thursday. Yesterday was not very impressive. The market was showing signs of pause and the flows were not that great. But in general, I guess this has just been more than a dream run even for best of the bulls. None of the bearish narrative has made any sense. You've just stayed with the market. If you've just kept the faith going, both locally and globally, I guess markets have really obliged everybody. So the setup, I think, is very simple, that globally and locally markets are consolidating. They could consolidate for maybe few days more, but directionally and both in terms of momentum, I guess markets are poised to go higher. My advice really would be, or my suggestion here really would be, that don't get into this myopic attitude of assuming that markets, even in best of the bull run, markets will move up on a daily basis. If markets they consolidate for next couple of days also, I think that would lead to some base building. Yeah. And that base building, I think, is actually very, very healthy. Otherwise, the pace of the rally has been nothing short of staggering and scorching.
Yeah, but the global setup as well seems fine. Crude under control, 10-year yield US as well, pretty sedate.
Yeah, that is the interesting bit, Aisha, that as of today, the big surprise I think has come from the US bond market and the global bond market. It's not only the US 10-year paper, it's also crude and it is also the Japanese yields, even local yields also. The yields have come down. And that could be an indication of whether a recession is coming in 2024, or that is a clear indication that now it would be really difficult to construct a scenario that US bond yields will go back to 5% in a hurry. If that is the scenario, then obviously it means that flows will start diverging back into Indian markets. So I look at the crack in bond yields from two perspectives. One, what it means for flows in the short term, and is this an early sign of that some trouble is coming in 2024? I would say we'll talk about 2024 when it happens, but in the near term, because the bond yields have picked 5 has become 4 or 5.1 has become 4.1, it is a clear indication that things now, at least on the flow front, will get better.
Okay, yes indeed. So looking at a pretty stellar setup right now, take all the parameters into account and things are looking strong and we're set for the best week. By the way, in the last 3 years, that's the impact of the geopolitics that we've seen on asset classes as well. And you've seen the 10-year yield, the dollar index, all of that, that hasn't been too impacted. The Nifty Bank as well set to see its best week in a year. But that aside, today the talking point is going to be the RBI policy. And Nikunj, this is something that you've been alluding to as well, that the kind of setup that we have at hand, the RBI governor has his decision pretty much laid out for him.
Yeah, I mean, we spoke about the fact that 2 credit policy ago, he had to bring the cannons out.
Yeah.
And I think the cannons are back in the barracks now.
Yeah.
We can argue back and say that the war on inflation is not over yet, because seasonality in terms of tomato prices, vegetable prices have started going up. So I don't think in this kind of an environment any central bank governor will come out and say that, oh, we won the war against inflation. Reserve Bank of India is the inflation print, even though it's come down, it is still above what the RBI comfort point is. So of course you've not won the war against inflation, but the GDP print, what the general mood point is in terms of where the economy is headed, where global cues are, how crude in a sense has been a tailwind, geopolitical tensions, if they were the eye of the storm, so to speak, they've not really impacted asset prices. So I think Reserve Bank of India, I think the tone and tonality is not going to be dovish, it's going to be hawkish only. They would mention that the inflation concerns cannot be ruled out completely. I don't expect them to come out with something very big in terms of a rate communication. But what you would want to hear from them is that what is happening to this entire unsecured loan space. I mean, why has Reserve Bank of India come out and put out measures to curb the growth of that segment? And RBI has two jobs. One, manage inflation, and second, ensure growth does not get dampened. If growth of a particular category is also exploding, they have to come out with risk management. So do they have access to data, which surely they have, where they feel that the unsecured loan category in a sense is reaching what could be called as high risk level? You have to hear from Reserve Bank of India. You've not heard from the governor after the announcements happened. So I think a lot of attention would be centered around that also.
Yeah.